Hi, and welcome to the latest edition of the Sharesify podcast with me, Ian Conway, and my good colleagues and friends, Steve Frazer and James Crux. How are we, gents?
Very
Very
good, eh?
well.
How's your week going? What's been catching your eye, Steve?
Well, there's only one real big story, I suppose, this week, and that's been the AI scare trade. I've been busy bashing out some words to try and bring some analysis to it. I think what's really interesting to me about this is that there's a couple of things. Firstly, I think markets are they're really struggling to price the risk or the perceived risk of AI and in the software space. And so on limited information, they are taking what they normally do. They take a fairly conservative view. So you're getting lots of companies sold down on the basis that things might go much worse than they perhaps will go. So I suppose investors might look around for bargains in this environment. But the other factor, I think, as well, is just to say that I wonder whether this was just an excuse that investors were looking for a correction of sorts. We know that valuations can get rather inflated and frothy at times, and some parts of the AI sphere, should we call it, have certainly seen frothy valuations. So I wonder if this was actually quite a useful exercise in terms of just drawing back expectations and taking away some of the euphoria and bringing a more analytical viewpoint. So yeah, I've written this piece. It'll be live very soon. Go and have a read of that.
Marvelous. Yeah, I mean, just talk in terms of markets, what have we got? We've got Nasdaq's actually flat to slightly up over the last week. So we had this big scary sell-off on Monday, but we
Yeah,
seem to have kind of stabilized now.
yeah,
Looking at S&P's flat over the last week. Interestingly, Russell 2000, which had a very good week last week, is down over the last five trading
yeah.
days.
Yeah,
It
I
had
mean,
a
I think as
decent day
well, a point
yesterday.
to make here, Ian, is that many of the stocks that borne the brunt, perhaps, of the sell-off. I mean, IBM had its worst day in 25 years, down about
Mm,
13% the other day. I think many of the stocks that have really borne the brunt of this most recent sell-off are not the biggest companies on the S&P or on the Nasdaq or Nasdaq 100. So companies like Amazon, Microsoft, Google, etc., Alphabet, they've been much more sturdy and stable. So of course they're going to have a much bigger influence on the wider markets than say an IBM would, which is relatively small compared to those giants.
yeah. What's been grabbing you, James?
Yeah, so contrasting fortunes for two FTSE 100 names. So one that was Convatec, which is perhaps under the radar in terms of FTSE 100 names, but it upgraded its growth targets and it's got a really good growth trajectory. And obviously another one that's much better known is Diageo, where Dave Lewis, lived up to his nickname of being Drastic Dave,
Yeah.
by absolutely slashing the dividend to try and repair the balance sheet and get this recovery underway, which looks like it's going to be quite an uphill task given the latest set of numbers.
It does,
Yeah.
and did I see again, tequila sales kind of part of the problem?
Yeah, absolutely. Although Guinness continues to motor, which is a very iconic brand. And there was a comment in there which caught my eye. Lewis said that competitor brands, more affordable alternatives, are a bit of a headwind, which suggests perhaps in the US people just haven't got the cash to spend on pricey spirits.
Well, I think,
Mm.
James, it's worth holding my hand up here, and I think Lewis owes me a debt of gratitude because I do my fair share in supporting the Guinness volume trade. So you're welcome, Dave.
You're
Is that
doing the
zero
heavy
percent
lifting
or?
there, Steve. In fact, I actually did read a comment the other day in one of my local papers saying that they reckon there's going to be a shortage of Guinness this year. So, is that down to you, Steve?
We had a shortage of Guinness. I don't know, was it about a year and a half ago?
Yeah, we did.
It,
Yeah.
it seemed relatively short term, but I think a lot of it wasn't so much about manufacturing. It was about the supply chain was a bit up the spout, and I'm not exactly sure about why that was. But yeah, let's hope not. Now the Six Nations out of the way, maybe the pressure will ease off.
James, there was also some big news in the investment trust world this week.
Yeah, very, very busy week again, Ian. It's an investment trust sector that continues to get smaller. So over half the Smithson shareholders opted to take the money and run rather than roll over into this open-ended equivalent.
Ooh, ouch.
Um, yeah, which is quite a seismic development. And then you've got BlackRock, Smallers, and Throgmorton are going to come together. So that sort of halves the number of names there, which probably looks like a sensible deal. Saba supports it. But I guess what you might lose is a bit more of the kind of Dan Whitestone influence, although he
Yeah, yeah.
retains, he's still a co-manager, but perhaps he's dialed back a bit.
Yeah,
Now,
yeah,
talking,
that would be my concern is that because I mean Dan has got a real reputation for spotting some really interesting companies, and of course he's always had this ability to go short on occasion. He doesn't use it that much, but when he
No.
does, it's to often to investors' benefit. So I wonder if that will those chains will be kind of tied up on him.
Yeah, and
now
that's sort of
talking
another tool in the toolkit. Yeah.
talking of investment trust and Saba, actually, Steve and I had a really good chat with Mark Northway,
Yeah,
director and former chair of Sharesoc on Monday. And for anybody who hasn't watched this podcast yet, watch it because some of his views are quite surprising when it comes to Saba and its
on that, yeah,
influence on the
yeah,
investment trust. So, wouldn't you
yeah.
say, Steve?
And I think what really struck me as well is that we get a guest on like Mark and we've got sort of 10 minutes to have a chat about certain things and we could have run over multiple topics. There was we touched on share buybacks versus dividends, which is an age old kind of debate point. We touched on as well about what Smithson's doing, going from an investment trust status to an OIC status, and wonder whether or not that's the right thing for them to do and why it might be right for certain investment trusts to follow that path. So there was loads of really good content in there. And we could have talked for an hour.
Oh, easily, easily. So that was the week so far. What do we got to look for? Well, obviously, Steve, you've got Nvidia overnight.
Yeah, I mean, really interesting, I think, because given the state of the markets at the moment and this kind of AI disruption mood. I suppose everyone's going to be looking at Nvidia that come out this evening. They're expected to put up some really strong numbers, something like 60% revenue growth, something like 100% earnings growth. That's year on year. But can they beat those numbers? Can they do even better? And I just suspect that. I mean, this mood around suggests that Nvidia's actually its position is just getting strengthened and strengthened
Mm.
in the AI space.
Well, dare I say also, from what we've seen so far in terms of results, the outlook is going to be absolutely crucial. And we talked about this in one of our very first podcasts.
Yeah.
So I give you Walmart, beat forecasts, outlook
Yeah,
disappointing, stock gone down.
yeah,
Home Depot, beat forecasts, outlook okay, shares went up. I see Lowe's has just come out,
yeah,
beat Q1 sales forecasts, but the outlook for the full year disappointing, indicated down. So
yeah,
it comes down as much as the results. It comes down to the outlook
yeah,
nowadays.
absolutely. And it's a point I've made in my AI feature is that, and I think this is wider than just technology. It's investors are looking beyond near-term earnings. And they're really starting to look at structural challenges, risks, and opportunities from the advent of AI. I mean, AI is going to touch almost every single part of
Mm,
the ecosystem, and so even if you're a big box retailer like Lowe's, you're still going to be influenced by it and impacted by it, but in a negative way or in a positive way. So investors are making best guesses at the moment about how a business might look in 3 to 5 years' time. And of course, there's the real limitations on the information, but it can be really good results today and maybe even the next quarter. But beyond that, if the market's
yeah,
got a bit of a sniffy mood about you, your share's going to come under pressure.
yeah, absolutely. James, what are you looking forward to still?
Yeah, yeah, I'll be keeping my eye on two names, so Tate and Lyle and Genus later this week. Tate and Lyle's been a real poor performer. There was kind of bid rumours that never came to fruition from private equity, and it's kind of the growth
Yeah,
That's
outlook
right.
has come down a bit. Yeah, and then Genus, which is the animal genetics name, which is in a bit of an upgrade cycle. So we'll be seeing if they can sustain that when they report. I think it's
yeah. And
half the numbers.
one other bomb as well is well worth watching out for would be, of course, tomorrow we've got Rolls-Royce. Now we've mentioned this before on this podcast. 3 years running, it's been the best performing FTSE 100 company, give or take. Ultimately, it's just knocked things out of the park in terms of share price. Can its operational performance and that recovery, can it justify
Yeah.
the kind of the heady valuation it's now on? It's on about 35 times PE now. So one wonders what they're going to say and how that might impact their share price trajectory.
Yeah. I've got my eye finally on LSE Group, which reports tomorrow, London Stock Exchange. So
Yeah, we always talk
we'll
about them, don't
see.
we?
We will. We're back to that. We'll see if they have anything to say about this talk about Elliott. And then on Saturday, of course, we've got the very last set of results from Berkshire Hathaway with Warren Buffett as CEO, because he handed over to Greg Abel start of this year.
Yeah.
We know they've slashed the Amazon stake by 75%. We know they trimmed a bit of Apple, but everybody's, there are so many Buffett watchers out there, so it'd be very interesting to see what comes of that, and that's out
And
on
I tell you
Saturday.
what I'll be really interesting to see if there are any comments, either from the great man himself or from the wider management, about the impact of AI in the insurance industry. We know the insurance has been under some strain because of the perceived fears of the impact of AI. I wonder what kind of commentary they might give, because Berkshire's always had massive stakes in insurance companies, so it's been one of
Indeed.
their kind of core holdings. So it'd be really
That's
interesting to see how they address it.
absolutely, because that's where its float comes from to run the investment business. Well, chaps, I think we'd better wrap it up there. It's been real. If you would like to come on the podcast and you'd like to get your views across, if you're a company, a fund, or a trust, please just email us at editorial@sharesify.com. If you're watching this on YouTube, don't forget to like and to follow, and we'll catch up with you on Friday. Cheers for now.
Brilliant. Look forward to it.
Yes.
Take care, guys.